Introducing AusBiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover AusBiz Capital GrowWise, investing informed by experience.
This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
This is the Global View on a Thursday here at AusBiz. Thanks for joining us. I'm Andrew Gagan. Let's take a look at what's happened overnight. Risk on across global equity markets as investors were buoyed by progress in trade negotiations with signs the European Union and the US will strike a deal similar to an agreement struck with Japan. Investors on Wall Street were also focused on earnings results from Alphabet and Tesla after the closing bell. All major indices climbing, with the S&P 500 claiming another record high close. Alphabet beat analyst estimates for its second quarter and flagged massive demand for its cloud computing services as it hiked its capital spending plans for the year to about $85 billion. The search giant's revenue growth was driven by Google Cloud sales, which surged nearly 32%, well above estimates. Tesla reported the steepest decline in quarterly revenue in more than a decade, with a 12% fall, while its adjusted profit per share of 40 cents lagged the consensus of 43 cents a share. The EV maker began its first builds of its affordable model in June and expects volume production in the second half of this year. And during the session, Nvidia helped drive the S&P 500 along with GE Vernova, which hit an all-time high after the power equipment maker raised its revenue and free cash flow forecasts and beat Wall Street estimates for second quarter profit. The stock has gained more than 80% since the beginning of the year, as it benefits from growing demand for power from AI and cryptocurrency data centres. Medical equipment maker Thermo Fisher surged after beating estimates for second quarter profit and revenue. Texas Instruments tumbled after its quarterly profit forecast pointed to weaker than expected demand for its analog chips and underscored tariff-related uncertainty. And the prospect of a trade deal between the US and the EU has seen shares in European car makers surge, led by Stellantis, Mercedes-Benz, Volkswagen and Porsche. Well, European trade negotiators say the EU and the US are moving toward a trade deal that could include a 15% baseline tariff on EU goods and possible exemptions. Presently, the EU faces a 30% tariff rate that President Trump has vowed to impose on its exports from August 1st. This follows a trade deal with Japan that will see Japan investing $550 billion into the United States and paying a 15% reciprocal tariff. And President Trump also announcing a new 19% tariff rate for goods from the Philippines and said the US goods would pay zero tariffs. Well, trade deal optimism has prompted rising US bond yields, with the 10-year up 5 basis points to 4.38 and the 2-year at 3.88%. And the US dollar has strengthened against the Swiss franc and euro, but weakened against the yen, as that new trade deal was offset by political uncertainty surrounding the Japanese Prime Minister's future. The Aussie has climbed back above 66 US cents. And Bitcoin is weaker, trading at around 118,000 US dollars. Oil prices were little changed overnight as investors assess the trade developments between the European Union and US following that deal with Japan. Brent crude futures at $68 a barrel. Copper was up almost 2%. Iron ore fell close to 1% at 103 US dollars a tonne, and the gold price has retreated on the prospect of more trade deals. Spot gold down more than 1% at $3,387 an ounce. Well, those trade deals and the prospect of more to come has had a profound effect on currency movements. To get across that, I caught up with Ntonifor from BCA Research.
I would say that the impact would be some benefit to this, call it like pushback on US isolationism. So like the pushback to the fact that the exceptionalism of the US has been really, really threatened right now. So we're seeing the US come back to the table in terms of trade deals. We're seeing that the impact of the trade war, which was very, very negative for the US dollar, is abating at the margin. And so I'll expect that some of the currencies that have benefited from the move away from the US would have some sort of have a consolidation in the very near term, in the sense that you could see that with the US becoming a little bit more reasonable, you would have, some upside to the US dollar in the very, very near term, and downside to some of these currencies that have done exceptionally well, given that a lot of investors have poured money into these currencies.
Well, let's start with Japan, of course, having just struck that deal with the US, which was certainly perhaps seen as more favourable than anticipated in terms of the tariff rate. But there are a couple of issues at play here, obviously with the trade deal done, but also the political instability in Japan. How's that weighing on the yen at the moment?
So there are a couple of things. The starting point for the yen is very good, right? Why? The yen is the cheapest major currency in the world right now. We got a deal whereby the tariffs were less than what the market was expecting in terms of Japanese equities and all of that. So like inflows into Japan are going to rise quite aggressively. We saw that with the performance of auto. When you're looking at the yen, valuation cheapest currency in the world, major currency, sentiment improving quite dramatically, and then we have a political catalyst as well. So I think if you were to bet on a currency over the next you call it 2 to 3 years, you'll be betting on the yen. In the near term, if the dollar bounces, obviously, the yen will be affected. But I think that the yen is a great long-term bet in terms of inflows that are going to go into Japan.
All right, let's now turn to what you're seeing with the euro, and no deal done, but perhaps there's some optimism there that one will be completed. What movements have you seen with the euro, particularly versus the US dollar?
Euro versus the US dollar. So typically when you want to look at currencies, you want to look at three vectors. You want to look at what's happening in terms of valuation, you want to look at what is happening in terms of sentiment, and you want to look at what's happening in terms of the macroeconomic environment. Given what's happening in Japan, or what just happened to Japan, you would want to be long-term positive on the euro, right? So again, I look at a bunch of measures. Tactically, the euro can come down a little bit, but you would be buying on weakness rather than rather than selling on strength. Euro USD, the fair value models tell me that you have at least 10-15% upside at the minimum over again a period of call it 12 to 18 months, even though you could have some near-term selling as this exuberance on downside exuberance on the US dollar winds down a little bit.
And finally, let's turn to the Aussie dollar, and just noticeably it has just climbed up to 66 US cents. What are the prospects you're seeing there, with certainly the case that the interest rates here in Australia are going to fall perhaps again as early as next month? and but obviously also that relationship with US dollar.
For the Aussie dollar, I pay attention to what's happening to interest rate differentials for sure, but that is not the key driver of the Aussie dollar. The key driver of the Aussie dollar is what is happening to terms of trade. And in terms of currencies, because again, I mentioned I'm long-term bearish on the US dollar, and in terms of currencies, one of the currencies that I think will benefit from any downside in the US dollar beyond a technical bounds is the Aussie dollar. I would say that the one critical point is that Australia is one of those economies that sits at the nexus of the green energy revolutions. So one of the biggest natural liquefied natural gas exporters. So terms of trade are going to do well because of that, as China tries to shift away from coal towards natural gas. One of the biggest exporters as well of critical minerals that go into this green energy, like cobalt, nickel, and all of that, and copper as well. So in terms of the demand for the Australian dollar, which is what you've been seeing in the market, so what has been driving it very recently has been the downside in the US dollar that we've seen. But I think longer term, if you want to be betting on one currency, you want to be betting on the Australian dollar, because terms of trade is what's going to determine where the currency is going to go. And Australia is basically one of the few countries that is perfectly positioned for upside in its currency and terms of trade.
Chester, do you have a level in mind for the end of the year for the Aussie dollar?
Pardon?
Do you have a level in mind for the Aussie dollar, given it's a 66 at the moment?
It's difficult to time a level. I would tell you that, like, according to the models, like, like it's telling you that it's about 10 to 15% undervalued right now, even given the recent rise. That level tends to play out, to be honest, over call it 3 to 5 year period. So in the near term, it could go anyway. But like, I would say that if you want to plug in a level in terms of longer term, you should at least expect a 10 to 15% upside, call it over the next 3 to 5 years. I would expect that level will be hit like over the next 2 years rather than the next 3 to 5 years, just given the catalysts that I'm seeing in the Australia dollar right now. Again, to be very clear, Aussie has done really well. That has been driven by the fact that the US dollar has done quite poorly. So you could have a pullback, and that pullback is actually going to increase the upside, because that 10 to 15% can become, I expect a 5% bounce in the dollar. So that 10 to 15% can become 15 to 20% over the next few years.
That is the outlook from Chester Ntonifor from BCA Research on the Aussie dollar and other currencies. Let's turn to the local market just ahead of the open. So SPI futures up 0.25%. We are potentially looking at a new record on the ASX 200. Join us in just a couple of minutes' time.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.